Steps to invest like Warren Buffett. Nothing out of the usual is required of you if you wish to invest like Warren Buffett. Many new investors are taken aback by how straightforward the Oracle of Omaha's approach is. Buffett buys shares in outstanding companies selling at discounts to their true worth and then holds onto them for as long as they continue to be excellent. One would expect there to be more to the tale than that. In this post, we will delve deeper into Buffett's investing strategy, present some real-world instances of executing his investment philosophy, and list the actual stocks he does invest in. Hello everyone and welcome to another video on our channel. In today's video, we're going to discuss steps to invest like Warren Buffett, so stay tuned to find out. Now let's start our video. Look for a margin of safety. The need to have a buffer between your investment and potential loss is paramount in Buffett's approach to investing. In its most basic sense, a margin of safety is the set of circumstances in which an investor can make a financial investment without incurring a loss. An investor has a $2 buffer zone if a stock sells for $10 per share, but the actual value of the company's assets is $12 per share. A severe drop in the stock price is unlikely due to the company's assets' intrinsic worth. Buffett's investment thesis is to never overpay for a firm. A decade of positive economic improvements may be nullified by paying too much for the share of a great company, as he puts it. Don't follow the crowd. Another piece of Buffett guidance that new investors would do well to heed, especially in this day and age of online discussion forums like Reddit: avoid buying stocks because everyone else seems to be doing it. Do not always try to go against the grain by selling the stocks that everyone else is purchasing. To invest like Buffett, it's better to tune out the noise and look for bargains on your own. Aside from that, he adds, investor temperament is more essential than intelligence. You need the type of personality that gets equally no joy from being in or out of the mainstream. Don't fear market crashes and corrections. As investors, we know that we should be looking to buy low and sell high when it comes to stocks, but our human nature often leads to the opposite result. When we see our friends succeeding, we feel compelled to follow suit. When the stock market crashes, we tend to bail out quickly to avoid losing even more money. When stock prices fall, it allows Buffett to make bargain purchases. Would you freak out and run away if you were shopping at your favorite store and discovered that everything in the store was 20% off? Not at all. Buffett adds possibilities are rare when his preferred stocks go on sale. Put out the bucket, not the thimble, for gold rains are rare. If you're liking this content so far, please consider subscribing and liking this video. Now let's continue. Approach your investments with a long-term mindset. The advice, if you aren't willing to hold a stock for 10 years, don't even consider owning it for 10 minutes, is one of the essential investment dictums you can learn from Warren Buffett. He doesn't pick stocks based on predictions of price increases over the next few days, months, or years. When Buffett invests in a company's shares, he intends to eventually become a majority shareholder in that company. Even though he often sells equities for various reasons, he invests in keeping most of them indefinitely. Also, Buffett has said that an S&P 500 index fund or a similar set-it-and-forget-it investment is the most excellent investment most people can make if they cannot adopt a forever attitude with their stock holdings. Don't be afraid to sell if the scenario changes. The essential thing to do if you find yourself in a hole is to stop digging. Warren Buffett famously said when questioned about an investment, he opted to sell at a loss, even while he hopes to hold on to every stock he purchases indefinitely. He knows that market conditions and expectations might shift. You may be surprised that Buffett invested heavily in the mortgage giant Freddie Mac over 20 years ago. He sold the bank just before the financial crisis hit because he saw that its management was beginning to gamble with the company's money. When the financial crisis happened a few years later, it was evident that Buffett had made the right decision. Learn the basics of value investing. It is often agreed that Warren Buffett is the best value investor in the world. A fundamental tenet of value investing is focusing on acquiring assets for less than they are worth. The ultimate aim of a value investor is to acquire $100 worth of a company's shares for significantly less than $100. When investing, value investors look for a company's intrinsic value to be significantly higher than the enterprise value represented by the stock price. Value investors like Warren Buffett wager that the stock price of a currently undervalued firm will rise in the future as the market realizes the company's true worth. Well, that's all for today's video. Tell us in the comment section how this one was. I hope that you found this video interesting. If you want to see more videos like this, please consider subscribing for more and provide us with your valuable feedback. We'll see you in the following video with some more notable celebrities, facts, and stories. And until then, stay tuned.